Welcome back to Trading 360. It's time for our 360 round. We got some big news from Rivian, and we are seeing Rivian today jumping over 5%. Steve Wesley's with us, founder, managing partner, the Wesley Group, and Kevin Horner, senior manager, trading services education at Charles Schwab. Steve, I'm glad you're here. I know for a while you were on the board of Tesla. EVs are definitely in your wheelhouse. What did you like here? I saw that the first quarter loss narrowed. They kept the guidance intact. How did you interpret this report? Did you think it was a good one?
But I think it's a tale of two cities. In terms of revenue, $661 million, that's great. 600% year-over-year growth. That's terrific. But if you take a closer look, that's flat revenues from Q4. So they're going to have to ramp things up. The big question here is they're promising 50,000 units. They only delivered 8,000 in Q1, so they've really got to pick things up. What worries me just a bit, and I think they've got a great vehicle, but Ford is one of their big partners, and Ford has already sold 90% of their stake. Rivian's the other big, Amazon's the other big partner, and they're just ordering the minimum per contract. So big picture, they've got 11.2 billion cash on hand. They're going to have to raise money to survive later this year or next year. They've got to ramp up production.
So when they're going to want to do a capital raise, that will be viewed as a negative and could hurt the stock, Steve?
Well, that's exactly right. This is a choppy market, and I think we're about to see the great shakeout in the EV sector. So, it took Tesla 10 years to get to their first profitable quarter. Rivian was founded in 2009. They're already on the 14-year mark. They have got to get leaner. They've got to get this $1.4 billion burn per quarter. That is a lot of dough in this market. They've got to get leaner. They've got to get meaner. They cannot afford to lose another $6.8 billion this year like they did last year. The good news is a lot of others like Lordstown, Lucid, Nikola, they may not be so lucky. Rivian's got a first-rate vehicle. They are ramping up. They've got real backers. I think they can pull through, but I wouldn't be sleeping too easy if I were the Rivian management team now.
I see. Okay. Kevin Horner, what are you watching? I think you're taking a look at this chart, which is not a pretty one. That low of 1168 wasn't that long ago. And a lot of folks just say, all these other guys have a long way to go. I mean, Steve made the point of how they're shooting to make 50,000 vehicles. I mean, they can't even get out 10,000. Yeah. So they got a long way to go to catch up to the big guys. Tell me a little bit about the chart. What are you watching?
Well, you're right on the money. The downtrend is pretty evident. Had a horrible 2022 in terms of price action. 2023 thus far has not been a whole lot better, off more than 20%, even still with a pop like you've gotten today. And in truth, I'm sure there are many investors who were long the last 2-3 weeks who are more than happy to take a 20 to 25% gain out of this when it ran to 1575 this morning. That becomes a pretty important area here. I mean, this is an improvement, and a lot of short-term traders will tell you there might be a new level established with the lows of the day today, somewhere in the neighborhood of about 14.25 perhaps. But if you're not playing the trend just yet, then a lot of you are going to want to be on your hands, sitting on your hands and over the next couple of days to ensure that the level that's been reset here with today's action holds if you're looking at targeting that $16 area. And then, of course, there's always potential here, Nicole, because of the extended move to the downside we've made here. Percentage-wise, there's opportunity perhaps, but it's going to be more of a stair-stepped move in all likelihood. And when you're counter-trend trading, you need to look for your chances to take profits. And I imagine that's why you've seen the drawdown off of the fantastic open thus far.
Yeah, I mean, it's amazing as we look at this big picture. And as you said, people probably sold a little when they saw this jump because there is a certain element of frustration. Steve, what's the landscape like when you look at the other competitors? You mentioned Ford and Amazon, working with Rivian, but Ford getting out, 90% of it is out. And Ford has been sort of said, other than Tesla, as a leader in EVs. What names do you like in EVs now, Steve?
Look, here's the big picture. If you're an investor in the auto space, you need to know these three things. First, the world's going all electric. Whoever wins there is going to take the industry. Second, Tesla is way ahead of the others, sold 422,000 units in Q1. Compare that with Rivian's 8,000. So you've got kind of a barbell thing going on here. The big picture is Tesla's in first place, but BYD and some of the other Chinese companies, you're going to hear a lot about Geely, a lot about SAIC. They got the memo on EVs 5-6 years ago. They are prepared. So it's Tesla versus the Chinese, with Volkswagen coming on pretty strong. They did 144,000 units in Q1. That's pretty darn impressive. Those are the big three to look at. Now, Ford and GM, great companies. I love them. I'm pulling for the Americans. But frankly, right now, they're battling it out for honorable mention. I mean, GM deliveries, 20,000 units. Ford deliveries, 11,000 units. And General Motors, my heavens, they've been working on the EV thing for 11 years since they put out the first Fold. They ought to be well ahead of 20,000 units. Ford lost $2 billion last year in EVs. They've said they may lose $3 billion this year. So while the company's still profitable overall, they've got to up their EV game. So right now, it's Tesla versus the Chinese and Volkswagen. We'll see who else makes the cut. But there's a lot of other names out there: Canoo and Arrival, Rimac, Nikola, Fisker. A lot of those folks just won't make the cut. Doing EVs requires a lot of money. We'll see how it shakes out.
Oh, so, they're struggling. I mean, you're basically saying they have an uphill battle, a lot of headwinds here. The Rivian truck, the pickup truck, is particularly popular as far as the landscape goes in popularity. While there aren't that many of them, Kevin, what else are you watching as far as you're keeping this eye on Rivian and the group?
It's interesting you noted that. I've seen a lot of Rivian trucks in my neighborhood, oddly. I know that's anecdotal in nature almost exclusively, but for a trend trader like myself, I'll just remind everybody that, what we're looking at is a lengthy downtrend in place. The short-term uptrend is just that. It's very short-term. So clearing some areas over 16 becomes important again. Over 16, there's opportunity here, but, I still agree. There's a long way to go for this to be felt as a longer run opportunity here. Short term, sure, there might be some chances, but you're going to need to position yourself properly, needless to say.
And what do these companies, Steve, need to do? I mean, as far as innovation, I mean, I'm seeing something about enduro and batteries and things like that for Rivian. We know that Tesla's constantly reinventing itself and creating new products. You have, self-driving and different kinds of vehicles at different price points. What are these companies doing? Or is there anything that's super impressive to you?
Yes. There are three things every auto company, trucking and auto, needs to do. They need to take these three lessons from the Tesla playbook. First, take battery production in-house. That is the way you take costs down. That's why Tesla has a lead on the others in battery costs. Second, Tesla was a leader at what's called over-the-air software that drops additional money to the bottom line. Third, Tesla's the most modern roboticized manufacturing lines in the world. They have what are called large stampers. They can produce their vehicles in 10 hours or less. Volkswagen and others still take as much as 30 hours. So follow the Tesla playbook. You've got to get leaner and meaner. Elon may not be an easy guy to work for, but he's pretty darn good at wringing every extra dollar out of the production cost in the BOM. Other automakers need to be watching that with a clear eye.
Yeah, he doesn't take no for an answer, from what I understand. Steve Wesley, Kevin Horner, good to see you both. Steve Wesley of the Wesley Group and Kevin Horner of Charles Schwab. Thank you both very much. Good to see you.